Many had believed the trade dispute could soon be ended. When negotiators met in Beijing last week, there had been hope for a quick settlement. It was believed things were going well. And then, U.S. President Donald Trump made an announcement on Twitter. For 10 months, China has been paying tariffs to the USA of 25% on $50 billion of high tech and 10% on $200 billion of other goods. These payments are partially responsible for our great economic results. The 10% will go up to 25% on Friday. The tariffs are indeed a lucrative revenue source for the U.S. In October 2018, income from tariffs rose by about 40% to $5.5 billion year on year, according to the New York Times. This week, a high-ranking Chinese trade delegation is scheduled to visit the U.S. Following Trump's trade announcement, a media report has said that the Chinese side is considering canceling the talks.
Let's break this down now with Stephen Beardsley, who joins us from DW Business. So why is Trump making this threat now?
Well, remember, Sarah, that as these negotiations with China have been going on, the U.S. has been holding out $200 billion in goods, raising the tariffs from 10% to 25%. That'd be a huge blow to the Chinese. So first off, this is pressure tactic, right? The reason for that, of course, we know that Trump has been very impatient with the pace of these negotiations, and probably impatient over the fact that they won't contain the full scope of what he would like them to contain. There's a lot going on. He talks about the trade gap. He talks about also intellectual property and Chinese respecting Western intellectual property. And he talks about things such as cyber theft as well. So containing all of these in one set of negotiations has proven very, very difficult. It's proven very, very awkward. And so these negotiations have been kicked out further and further. And another reason that's important to note is that the U.S. economy is doing so well, and there was such a positive jobs report last week, that we shouldn't be that surprised to see this coming now. He might feel that he has the leverage to really ratchet up the pressure a bit more.
And on the back of that positive news on the U.S. economy, I mean, Donald Trump has made a claim in that regard, saying that, you know, that is in part due to these tariffs on Chinese goods. What are we to make of that claim? Is he right?
Right. There's nothing to suggest that that's the case. I mean, these tariffs are bringing in money to U.S. government coffers in the matter of tens of billions of dollars. That's really, in the grand scheme of things, not that much. The U.S. economy isn't really profiting off of the back of this to such an extent that it's furthering the boom. That boom has been years in the making, but it's also been sort of turbocharged by Trump's tax cut in 2017, by his deregulation, and by a number of factors that we're still trying to figure out. But the likelihood that these tariffs are turbocharging it, very unlikely. In fact, studies have shown the opposite, that it's affecting consumers, that they're the ones who are paying for this, and the economy might be doing better, actually, without them.
And how are the markets responding?
It's earth-shattering to them, especially the Asian markets, because the Chinese economy, as we know, is already very weak. That's another form of leverage that Trump is seeing, and they see this as further bad news for the Chinese market. And so in Shanghai, down almost 5%. In Hong Kong, it's also down, and Dow Jones Industrial Futures also down. So we'll see what trading does in the U.S. on Monday as well, and how they respond. A lot of attention on these U.S.-China trade talks. It's going to cause markets to ripple, no doubt.
On the story for us, Stephen Beardsley, thank you.
Sure.